What's going on, boys? We're going to be going over some trade recaps this weekend on Nike, Google, NKE Energy, and DraftKings. These are my primary focuses just because of the charts that I really liked. And this is a consumer on Tech Blood. There was early week distribution that I noticed on micro distribution from actually last week on Tech. Whenever I look at that, and whenever I looked at a bottom consumer that's really coiled in the pivot, the swing low that we have on the daily charts coming off of a previous earnings gap, bull gap, that was filled, right? And we got a first kind of buyer coming in here on Nike, but then the following day we swept the earnings candle high into that fresh bear gap, and then we obviously sold. That's a little bit premature, and then from there, that's whenever we fill the gap. We find that buyer, we get a heavy volume gap up, we create a bull gap internally, and then we go in for a secondary test of that resistance. We fail it. Obviously, that's obvious. I would never take a break in base with this type of structure with no consolidation within the mid-range here at equilibrium of this move, and it kind of just looked like a bull flag and then it failed. I would never look for an entry like this. That's just not good considering you're taking entry on a break in base of an earnings candle high in a bear gap with a heavy volume marked down. It's not good, right? But it could be building a campaign, and that's what I was looking for. So whenever you look at a chart, and this is what they call the pennant, right? It's lower highs and higher lows, but there's really no effort from either side. But this is favoring, given the context of where the chart is, and given the fact that we did have micro distribution looks within some all-time high failures in tech. We had a lot of tech weakness, so I'd be looking to transitioning my focus into a consumer name, a well liquid chain that marked down into a previous bull gap where you're getting that relief. That relief led to a failure, and now you're getting higher lows from buyers and lower highs from sellers. But sellers tried so many times, so we always want to measure effort versus result. And they tried here, they tried here, they tried here, and then they tried within here, and they failed every single time, all within a strong seller ask coming off of 93. And what was happening beneath that? We never tested into 93. We just coiled slightly beneath it, and we're just creating resistance that was being absorbed and absorbed and absorbed and absorbed day by day by day. This is probably a 10-day compression here on Nike. So whenever we do get some volatility, or whenever we see the discretionary starting to move, that's whenever you could start looking at Nike being a very vulnerable trade opportunity, given the fact that the implied vol is relatively decent on this name, and also given the fact that you're going to get an easier trade whenever you see this internal resistance finding the expansion, the retest, and then the continuation. So we added calls here on Wednesday. We got a really nice win over here, and then I started to de-risk and scale the position as we cleared past these highs that were created the following, like the previous day high. And then the market did see a sell overall as a whole into close on Wednesday, and then I added a little bit more exposure to a profit roll on next week expiry over here. And then from there, that's whenever we started to see, okay, we got the gap up, we pivoted off of 92 with a higher low, and then I started to see the tape getting really, really strong over here, where we caught it here, and then I caught and filled a little bit more as we broke through this resistance. Because keep in mind, guys, whenever you're looking at expansion, each and every single day that goes by is just going to be another day where the effort matters more from a particular side. So whenever you see a chart coiling and coiling and coiling and coiling, but then you see a potential failure on the table, that failure leads to a failure from sell side, you're just going to see these charts where there's going to be one direction at one point, where there's no more every single ask that did try to step in here where there was a previous strong seller ask off of like this bear gap, I guess you could call. Whenever you start to see how the seller almost has little to no effort off of that spot, and then you start basing levels is whenever you're ready for that expansion. My target for whenever we did see the real expansion was going to be 95 area, just because I wanted to see price get above these highs, given the fact that if there's no supply here, and then there's a strong seller ask that's being built and incrementally wiped as as the days go on, then I would be looking for a break, a base, and then a move above these highs. And what it's likely going to be doing is moving probably into somewhere of this resistance up here towards that earnings candle high, which is this spot right up here. So that was my target. Just give yourself a little bit of a wider range to start scaling from. And then funny enough, that's whenever we started getting those end of month flows kicking in, and then that massive move, which I wasn't even paying attention to that at first. So that was really nice. But this was just a break, a base. I added even more here. Keep in mind, I still had some positioning from down here and over here, so I was green. And then the previous day I did add it over here on this morning. We did bull flag, and then we saw the expansion in the move. But that was a failure, and then we bled into close. Now, however, that's all just giving back up this move, and it's just pushing its way back down into a support. This isn't necessarily looking like any sort of breakout failure. That's all speculation, because on the chart and where we are in the chart really matters. And when you're looking at it from, like I said, lower high by lower high by lower high by lower high, look at how I'm not a big trend line guy, but this is lower high, lower high, lower high, lower high. Well, that's actually a failure candle, and then it gave us a sell. Now that sell just started being absorbed, right? And it's being absorbed at a spot where it's very critical to put in a higher low off of this pivot down here. This is all, a big time area where we fill the gap, we find a buyer, we mark down, we actually have a worst day, but it's really low volume, and then we get a really heavy volume gap up. This is a newly created bull gap. So whenever you're looking at this, where is the support actually being created off of? It's being created off of this spot where bulls were first showing up after this report, right? They try to show up on the earnings day, and then it led us for a sweep of the earnings candle high. Like I said, that's not enough consolidation and digestion to really develop a campaign where this would start seeing the relief. Keep in mind, the names that have been marking down from the earnings reports have also been the ones that have been being accumulated, just because the bigger fish find value at cheaper spots like this on well-established companies. So whenever you're looking at this and you're going, oh my gosh, this is compressing, that looks like a breakout failure. It doesn't matter, because it all just bled with the market back down into a support, and there was no notable volume on there. And it was kind of just a weaker, and then whenever we got the gap up, and then we started to pivot off of that 92 area, and then I started to find a really strong buyer, and then that buyer reappeared with a strong aggressive bid up above this resistance. Now you would be looking for, obviously, sell side to bail, and then this is likely just a sloping accumulation into a path of least resistance being built from this spot over here. Whenever you get the retest, you would like this to hold, and then you would be looking for the expansion, like I said, above these highs, because that's where the second level of stronger resistance would be coming off of, which is 94.32. We didn't find any strong seller off of that. We kind of just flagged out into it, and then that's whenever the market carried this higher into that $95 area. That guys was a 100 and I netted 140 something percent on this position. This was next week expiration. Now let's go into Google. Google was just a little bit of a higher time frame analysis, where I noticed how we got the gap up, we got the sell. That sell was a little bit too early for me, but I noticed that this would probably end up being some sort of distribution just from the top, and then it's going to recorrect itself and retest into areas where we'd be looking for a healthy higher low. This trend is not healthy. There's little to no consolidation, as you could see. What it kind of did was mark down off of, I think this was bearish news, and then they accumulated the bearish news. They pushed this back up. They're obviously not putting in any sort of strong higher low. It's kind of just hourly inside bars or slight consolidation, really low volume, signaling that supply is playing pretty passive here and looking for a new high to then resell what they previously resold and took profits on from over here. So whenever we get the expansion, we get the new high, what happens? We get a pop the next following day in price discovery, and then we get an hourly inside bar, and then just a really weaker, stagnant type of close the next following day. What do we get? Same exact thing, guys. What this is kind of just a failure, it looks like, but we need to keep failing for days on end and then looking for the lower highs to take our trades off of those spots. So we fail the next following day, we bleed, and then we get the relief. Now, whenever we get the relief, where's the relief into? Where we previously bled from. We get a major pop off the open, and then a major sell right afterwards, and then we were trading within the confines of that orb high and orb low for the whole entire day and the next following day. It's probably likely a lower high, and it's probably going to find a lower high, recorrect its way lower, probably beneath this low, and start retesting into this heavier liquid spot where this is also going to be, take your low and your high, that's also your equilibrium range. So I was targeting 170 area on this trade, and then I scaled half on the trade on my monthlies at 170. I executed up here on these lower highs, and I was kind of just passively adding on pops over here and over here, and then if it broke structure and did something that looks like this, boom, and then maybe took out this high, based that high, and then moved, I'd probably get out on the retest. But this is kind of what my trade looked like. If you go over here to short position, it was kind of just looking something like this. I was looking for a retest of somewhere within like this range over here. So it's about a 4R trade, and I was trading monthlies. I was buying time here because I wanted to leave a little bit of leeway here for me to be able to add to the position just in case we were to see a little bit more of a pop and then maybe a little bit higher of a lower high, because we don't know if this is a lower high, but given the fact that we were trading for 2 days on end within the range of this hourly orb, on this given day where the buyer kind of stalled and then there was no buyer follow through, just led me to believe that that's going to be the lower high, and then what we would be looking for is a recorrection lower beneath this low, because I don't find the fact of any sort of buyer that's going to be able to withstand a campaign here where they go, oh, a little bull flag here on the hourly, and we're going to go here and here and here and here and here. I can't see the level of demand that we're looking through in the tape and the chart, everything, where that is very vulnerable and doable from a buy side perspective. So I'm looking for this low to be taken, a retest, like I said, somewhere into this equilibrium spot. And likely where my retest was looking to be was this gap that was, we got the gap down the following day after earnings. It was aggressive profit takers, and then we got the relief. We got another gap down and then a reaccumulation off that. We claimed it and then pivoted off of it. So this general zone over here, which is also, like I said, the midpoint of our low and current high, that is the spot in which I'd be looking for. So execution over here and over here. This is also a 3-day inside bar with a strong sell with a very nice spread to this where it's failing. And then the next following days, what do we get, guys? Just a lower high and 2 inside bars on no notable strong buyer. I like it. I like it. We couldn't ever close above the seller ask that was over here, and it was kind of just like resembling some sort of resistance. So that was also my execution spot, which was like 177. This was also, if you're looking at smaller time frames, just a discounted entry in smaller time frames. So that was that. Very passive trade. Wasn't looking for anything super crazy in terms of gains. It was just a 4-hour trade. So my stop was probably like 20%. So I'm looking like 50, 60%, which would be awesome to start scaling at. That's what I got. Locked in profits. Still have some. They're slightly green right now. If they go break even or a little bit red, I'm still going to try and de-risk that trade to just maintain green, given the fact that there's a lot of prints from the daily charts in tech that are a little bit bullish looking, but I don't know, we'll see. So that's that. NKE Energy. I don't like the levels of, I've been talking about how I didn't like the levels of consolidation here in NKE Energy, but we're breaking a resistance. This is a sloping accumulation, and then we're breaking structure with lower highs being taken out, followed by retest into them, and hold, and then move. It's a very simple profit rule here where I'm looking at strong tapes, bull gap fills, and then looking for a lower high off of this bull gap fill over here. We find the lower high with actually a gap up. Whenever we go into the 5, I added calls here, took them up into here, de-risked the trade a little bit, and then obviously never got the follow through, went back to where I was. and then we can never base this high, right? So the levels of consolidation here on the break of structure are a little bit not so great, right? Given the fact that we kind of just saw the expansion, a very ever so slight retest, and then a hold, and then a move, and then that move started to look like it was stalling. So I took bi-weekly exposure here this morning, and I also took it all the way back here, which was last week. Not this last trading week, but the week before that. So I added here, and then I kind of just scaled into here. Very simple trade. And then we got the failure, right? The next following day, we pushed up above this previous day high, and then we never got a break in base. We kind of just got a breakout failure, and then a bleed. But I'm going to keep my eye on this chart. Live time execution, what I was looking at was this was kind of just an hourly flag, right? An hourly flag into a retest of this wider range of resistance, now potentially turning a support. Didn't see any strong notable seller here. This is the bull gap fill. This never saw any strong seller. Got the gap down, pushed back into it, found a seller. That seller wasn't strong, and then the buyer just never reappeared. Next following day, he did reappear, so we're looking for the expansion of that flag. I don't care if it's an hourly flag failure. All we need is a move from 127 to 133 to get paid. That's $6. Bi-weeklies, awesome. So that's that, guys. We also did have. I'm gonna upload another video probably tomorrow. My market overview. I don't even know if I went over Nike yet. Nike was another really nice trade. Like I said, I think I did go over Nike. Yeah, I did. DraftKings. DraftKings was a 1,200% trade on just a contract. I'm not gonna act like I held the whole thing, but I've been shorting this one. Higher time, like wider, like further out expiry and shorter expiry, and I shorted it a million times up here on day trades, things like that. But this is just distribution. If you want to refer back to the other video that I talked about this in, go ahead. This is a top heavy chart where you're getting lower highs with seller dominant candle spreads on the daily, followed by really low volume consolidations that are relief back into the level where the tape kept getting heavy and heavy and heavier and heavier, where a seller was very notable, which was like the 45.60 spot, and then we failed the earnings candle high, and then we started to bleed. Like I said, you always got to look what's beneath you. What was beneath us? A bull gap to fill. Gotta fill it before you move up, given the fact that there's no willing buyer here to move price higher. We got the retest of this. What happened after this retest? Very weak markup. And then they sold it off again. Very weak markup. Look at the volume. Sold it off again. Now we start breaking structure, higher low structure on this day. Boom. And then you get news. And you get news whenever you retest this level. You get relief. That relief is all just into the earnings candle low. Like I said, whenever you're looking at a range, a very well-established range, you always want to look at the high volume candles where there's going to be more liquidity generated, and the tape's going to get a little bit heavier off those spots. That's this chart. That's this candle right here, this level, 41.50. And then we got the news the next following day. Beautiful markdown right into the bottom of this bull gap. Like I said, refer to the other video if you are confused there. But yeah, those are the 4 trades this week that really did well for me. I'm going to keep my eye on Tesla, but it's just not been something where I've really wanted to trade just yet. The compression is really, really tight here, and I think being a little bit late to the party can still make up for a really nice trade. So yeah, that's that. There's really not much more to the market right now other than waiting for some of these setups to play out. I have some other positioning, but that's just like commons and things like that. This is just focusing on options. One thing I did miss was Valero. I wanted to take this trade, but I missed it. Because I was focusing on some other things. This is such a long, big level. What's right off that level? A bull gap. What do we do? Fill the bull gap. What is this? Lower low being bought. Looking for the secondary lower low to be bought within the bull gap. and to continue the trend higher on this simple retest. Fills it. False breakdown. Probably going to be watching this one next week. If I can get a sell, what I'd be looking for is boom, boom, boom. That. We'll see.